Welcome to the Wilvolution Guide to Tax Planning. From an estate planning point of view, tax planning involves using allowances, exemptions and trusts to mitigate inheritance tax liability. Planning your estate in this way could save you thousands and in some cases hundreds of thousands of pounds, which can be passed directly to your family, friends or even charities. If you would like to know more about how to use tax planning strategies to save you money during your lifetime, feel free to contact us to discuss our advanced tax planning services. There are a number of exemptions and allowances which can be utilised to reduce inheritance tax liability, including the Nil Rate Band, spousal exemptions, lifetime gifts, potentially exempt transfers, and trusts. Let's take a brief look at each one in turn. The current Nil Rate Band is £325,000. Your share of any joint property will be subject to inheritance tax, even if the asset passes outside of your estate for probate purposes, unless the recipient is your spouse or civil partner, in which case the spousal exemption will apply. £325,000 might sound like a lot of money, but you may be surprised at how much your estate is actually worth. You should make a list of all your assets, taking into account property, savings, life interest policies, pensions, death benefits, and shares. You should also include your share of any joint property. To work out your IHT liability, you will need to calculate the sum total of all of your assets and subtract the relevant nil rate band. Times the remaining sum by 40% to reveal your potential IHT liability. If the figure is 0 or below, you do not currently have an IHT issue, although it is worth bearing in mind that the nil rate band will be frozen until 2019, by which time your estate will most likely have appreciated in value. So it is definitely worth keeping tax planning in mind for the future. If the figure is higher than you would like it to be, there are a number of strategies that we can use to reduce it. Since 2007, spouses and civil partners have the ability to transfer any unused allowance to their surviving spouse, allowing up to £650,000 to be used to reduce the IHT liability on their combined estates. The option to transfer unused allowance does not extend to cohabitees and other beneficiaries. Although it is possible to replicate the effects of a transferable nil rate band by implementing something called a nil rate band discretionary trust. This trust will allow non-exempt beneficiaries to use the testator's nil rate band to reduce the IHT liability of their own estate, while still enjoying the benefits of the trust assets. Feel free to contact us if you would like more information about this trust. Transfers of property between spouses and civil partners are currently exempt from IHT, so there would be no inheritance tax payable on your estate if you were to leave all of your assets to your spouse. If this is your plan, it is worth thinking about the impact this will have on your spouse's estate when they die. The value of your spouse's estate could increase dramatically, creating an IHT issue for your spouse's beneficiaries, for example your children or grandchildren. The exemption will not apply if you are not married to your partner, or if you wish to leave gifts to someone other than your spouse. It is important to note that the value of gifts to non-exempt beneficiaries will be deducted from your nil rate band allowance, in turn reducing the amount that you can transfer to your spouse. The HMRC allows us to make a series of gifts during our lifetime completely tax-free. This table shows the different gifts that you can make and the allowances that apply to each of them. The HMRC also allows us to gift up to £3,000 per year tax-free. This is known as our annual exemption. Any unused exemption from one year can be rolled over to the next, but will expire if it's not used by the end of that tax year. This may be enough to bring your estate under the IHT threshold if your potential IHT liability is extremely minimal. Bearing in mind that it would take 10 years to dispose of £300,000 tax-free at the current rate. In most cases, it will be both desirable and necessary to give away gifts in excess of £3,000 per year in order to effectively reduce IHT liability. That's where pets come in. Giving away your assets during your lifetime is one of the most effective ways of reducing your IHT liability, especially if you own high-value assets. In general, any lifetime gift which you no longer benefit from will be exempt from IHT, provided you survive for at least 7 years after the transfer. Failing this, IHT will be payable on a sliding scale, referred to as taper relief. This relief is applied as follows. Provided the total value of the gifts is less than the IHT threshold, any inheritance tax due can be offset against the nil rate band of the estate. If the total value of the gifts exceeds the IHT threshold, IHT will become payable on the value of the gift itself. It will then be the responsibility of the recipient or the personal representatives of the estate to ensure that any tax due is paid accordingly. Some transfers into trust will qualify for IHT exemption. Any gifts into trust that you continue to benefit from will not attract IHT relief. Examples of trusts that can be used to mitigate IHT include discretionary trusts, pilot trusts, and spousal bypass trusts. In the case of life insurance proceeds, simply writing the policy into trust can be enough to significantly reduce your IHT liability, as the proceeds will never form part of your estate. The value of any non-exempt gifts made within the last 14 years must be deducted from your nil rate band. If you would like more information on tax planning, feel free to contact us at info@wilvolution.co.uk or via the contact page of our website at www.wilvolution.net. Thank you for watching.